My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multi-millionaire. This is my trading game plan. Hey everybody, welcome to my trading game plan. Happy pre-Thanksgiving market session here. This again will be a full day of trading. Friday, the markets will resume after a day off on Thursday, but it will be a half day. I believe markets close at 1 p.m. on Friday. Now, as always, we're going to get into the nitty-gritty on the charts. The markets are setting up to float higher again today. This would be setting up, I believe, for our fourth up day in a row. Keep in mind, this is not unusual. Why? Well, because again, like I explained on Monday, you have the big money, the big institutional dollars, the big traders. They've already taken the whole entire week. They have that luxury, folks. They are multi-millionaires. And again, when it comes to this week, they don't want to travel on Wednesday. They want to travel last weekend and spend the whole week out of the office. And so when you take out the institutional money, who rules the roost? The retail investor. And we know the retail investor is a long biased investor and they're conditioned to buy the dips. So what do? You get a float back up over the last few days. Now, perfectly, the narrative has shifted in the last few days to the Fed cutting again in December. I do want to give out a warning, though. Once we get through this week and into early December, be on alert. We are likely to begin selling again, at least until we get closer to Christmas and the holidays there again. All right. So again, yes, it's a nice little float up. Don't be fooled. Watch how quickly the narrative shifts again next week to a bearish narrative and the markets start coming in. Let's take a look at the charts here. This is the S&P futures. So we see again, this was yesterday's price action after an initial flush at the open. The markets went into float mode and really floated up all day long. And then in the pre-market and overnight, we've been going sideways to higher. So the S&P is set to open about 20 points higher today. Overall, does anything change on the charts? And remember, the narratives will flip, right? The narratives will flip. We can, again, look at the charts to kind of bring us back to the ground. And this is so important for us as investors, right? Because as investors, we're very much tuned into what's going on in the world. I'm tuned in. I have to report it to you guys. We have to talk about the Fed, what's going on in the government, all of these different things. And the narrative switch, it can have this big impact on us if we let it. But what do? How do we stay grounded to what is reality? What's the truth? What's the probability? And to do that, we go to the charts. The charts are unbiased. There's no narrative there. It's just the price action, right? And so when we flip over to the charts, what I love to just say is, okay, we're now hearing about a Fed rate cut in December. We're hearing about, the economy's doing a little bit better. Maybe things are going to be okay. And we are seeing a rally. But in essence, has anything changed here? We're still below this major trend line, which again, is at this point a cycle high. Was the cycle high in 2021, the cycle low in COVID, the cycle low in multiple bear market low pivots that were higher lows, and the liberation sell-off low. And so eventually, as a technical trader, we just say to ourselves, unless we take out this high, this is your market top. This will be epic resistance on the charts. Now, flipping over to the QQQ, the Qs today will be testing this reversal wide range red candle low. But even if we get through that, we're going to slam into the underbelly of this parallel, right? So this parallel is a beautiful one. Goes back here, all of these highs. It gave us the high on the market before this latest sell-off. And then it even broke. You can see multiple hits along here. We broke, we gapped up per the retrace on NVIDIA's earnings before the dump out, and now we're coming back into it. So in the near term, this is going to be huge resistance on the QQQ. My level, again, right around 616 to 617, the underbelly of this parallel. All right, so that, again, will be a line in the sand. I think we might be able to test it on Friday, on Black Friday, when the markets are open for an extremely short period of time on light volume. But then my guess is we start seeing that downside come back in at some point next week. Maybe not Monday of next week. There could be a hangover effect where the big boys are coming back. The big girls are coming back to trade again and just kind of getting back into the flow of things. But again, I would say by mid next week, we're dumping out again on this market per the charts. Now, one of the big charts that I'm watching, and you guys know this one if you followed me at all, this to me is bigger than the US 10-year, bigger than the US dollar chart. This is the Japanese 10-year yield. If you look at how the market was behaving, what were we doing during this daily chart rally on the Japanese 10-year? The S&P was falling, right? If we go back and go to the daily chart, this is what was going on. In fact, right here, this coexists perfectly with this right here. All right, now we pulled back a little on the 10-year, so that was a relief rally to the markets. In addition, the big traders, because they're on vacation, a little bit of an uptick in the Japanese 10-year. No retail investors. Well, I shouldn't say no, because you guys are aware of this. But in general, retail investors, you guys ask your friends, they're not paying attention to the 10-year yield in Japan. This is big money that's going to be focusing on. This is the yen carry trade. These are the big things that affect liquidity in the market. And if we start to see, once the big traders come back, if we see the 10-year yield pushing up to 1.85, 1.9, 2%, this market, that would be the narrative switch to a sell-off in early December. All right, so we'll keep you guys in the loop on that. This is, again, will be a chart that I watch. Even tomorrow, this chart will be trading because, again, in Japan, Thanksgiving isn't the U.S. Thanksgiving. And so I'll be watching this over tomorrow and into Friday to see where it is going into next week. Now, flipping over to a couple other charts, NVIDIA yesterday filled a gap. This was on selling pressure that pushed the stock down sharply after it was basically Meta came out, or at least a rumor came out that Meta might be looking to buy chips from Google. Google obviously surged on that. What did I tell you guys yesterday? I said I'm pounding the table on a short on Google. Yesterday, it opened at 330. It went to like 318. We day traded it in the live day trading room. We made money. I said this yesterday. I said, guys, this is my favorite short of the morning here in the day trading room. Boom, we knocked it out of the park right there. All right. Now, if we go back to the chart and we flip over to Google, today, again, you can see Google bounced back to close around 323, but still well off those pre-market highs from yesterday. Look at these pre-market highs from yesterday. When I was doing my game plan, Google was right here at 9 o'clock. So it was trading at 331. Look at this dump early in the day, folks. What a great trade right there to the downside. But then look, it gapped up in the pre-market, and look, it's already rolling over. I told you guys yesterday this is a great swing trade as well. It's going back to this level here. This is my downside target in the near term, 292. This pivot high right here. Look for this over the next week or two to retrace back below 300. Great setup there, guys. Absolutely fantastic setup on that chart. All right, another chart that I've been pounding the table on and saying go long over the last week has been Oracle. Now, Oracle has been a struggle. All right, it's struggled. It's kind of been holding steady. It's been pushing even lower intraday yesterday. It did bounce back, putting in a pseudo bottoming tail right at technical support. And take a look at this, guys. Look at this chart here. Look at Oracle at 208 this morning. It is beginning to go, but look at the gap window on this chart. Now, I was short Oracle up here as a swing trade in Smart Money Stocks, my service, my swing trade service at Verified Investing. I am now long on this chart down here. Huge technical support, majorly oversold. And again, relief rally coming in. This should go back to 220 near term and possibly even higher afterwards. Now, you want another one of my favorite ones? Now, remember, folks, a month ago, you guys came on here and watched me, and that's if you've been watching me for a month or longer. And you know I was basically bearish on pretty much everything. But I'm a swing trader. So when things are into resistance, I'm going to be bearish. When things are into support, I'm going to say, hey, I'm buying this stuff. And then I'll exit on the bounce, and then maybe I'll decide to short again. So another one of my favorites here is MicroStrategies. All right, MicroStrategies, guys, it is unloved right now, but the chart is just too freaking good for me to ignore. And listen, by the way, I'm not perfect. So could MicroStrategies end up being a dud? Yeah, sure it could. But this is such good support down here on this chart. Now, I guess it could go down here. There's more support around 150. But ultimately, folks, look at the sell-off on this. this should be due for a relief rally back to about 235 to 240 on the charts. That's a nice technical bounce. Now, listen, again, if Bitcoin continues to dump out, then probably MicroStrategies goes down. We have seen Bitcoin bounce a little bit recently. Why hasn't MicroStrategies bounced? Well, number one, this is something I tell investors not to do. Michael Saylor's done this. He's over leveraged, right? He's basically taken on debt to buy Bitcoin. That means that MicroStrategies will when Bitcoin's underperforming and people are bearish on Bitcoin, MicroStrategies will underperform even more because of the leverage, right? Because of the debt. In good bull markets, MicroStrategies will outperform because of the debt and the leverage that he's taken on. So he's getting a bigger bang for his buck to the upside. But there's a risk here, right? I mean, their average price is around 74,000 per Bitcoin. He's not that much from being break even on the Bitcoin he has accumulated. And the markets are nervous. In addition, there's talk about basically a lot of these companies that have become treasury, Bitcoin treasury companies being taken out of some of the indexes because they don't have a core business, right? MicroStrategies has a business, but it only generates about $500 million in revenue a year. And really, at this point, MicroStrategies' mega play is just Bitcoin, right? That's what it is. And so the idea is should something that is just tracking Bitcoin be in the S&P, for example? Should it be in the S&P 500? That's a bigger question. It's not a question that I should answer, but it's a question that investors are dealing with, right? And so a lot of these factors are affecting it, but you guys know me. What do I look at? Do I care about the narratives? Do I care about the nonsense? I look at the chart. Because when I focus on the chart, I make money. When I listen to the narratives and they kind of hammer at me from X and all these other things, I usually lose money. And I'm sure many of you have had that same feeling or experience in your investing and trading career. So that's another one of my favorites. I even like Rigetti, but Rigetti's already bounced. Look at this level right here, this high pivot going back to this level here on Rigetti. Again, I think this bounces back to 28 and change right here, maybe even higher. It's already had a big bounce because it got down to 21. It's back to 26. But these type of former runners, they usually get a big bounce when people calm down and the fear subsides. Now, let's talk about one more stock, then we'll get into Bitcoin, we'll get into gold, we'll get into silver, we'll get into natural gas and oil. And by the way, yesterday, I think I did tell you guys, I did nibble on a long on oil. So we'll take a look at how that's doing. Okay, so number one, Eli Lilly. This is the last chart I'm looking at. Eli Lilly has had an epic run. Is it going to go higher? That's a great question. I will say that it is getting near-term extended. All right. So again, if we look at here, and we can bring up RSI. I mean, there's lots of different things here. I mean, look at the RSI up here. Now, listen, overbought RSI doesn't necessarily mean a stock is coming down, but it does give you a sense of how extreme the move has become once you start seeing RSIs. And this right now is near 87. I'd love to see a negative divergence. We don't have that yet. But I would say this is that at this point, this move from low to high is getting to the extreme, right? So if we do a measurement on this here, and we take this low, the stock's up 77.77%. Now, again, it could go a little bit higher, but I will tell you that just like I tell you, I'm neither bull nor bear. I'm opportunistic, meaning that, again, when something's into support, I buy it. When something's into resistance, I short it. Eli Lilly is on my high alert for a topping signal. If I get that topping signal, I'm going to short Eli Lilly. It is getting extreme to the upside. All right, let's go into Bitcoin here, taking a look at Bitcoin. This is your weekly chart of Bitcoin. I wanted to show you guys again. Look at this here, guys. So this is my ultimate near-term target, like over the next month or two. I think it's going to 73 to 75. But look at why it got a bounce right here. This is your weekly 100 moving average. I only personally, so again, people ask me, do you use the 20 moving average? By the way, I use simple moving averages. People often ask me that. Do you use exponential or simple? I use simple. I always say keep it simple, right? So I'll use simple moving averages. But the key is I don't really focus on the 20 moving average or even the 50 because those are near term. It's the ones, the longer the moving average, so 100, 150, 200 day or week moving averages, those are the ones that have more teeth. It's a longer period. The longer the period, just like the longer a trend line goes back, the more staying power it has. And so as a technician, this, again, catches my eye, and it makes sense that we're seeing a bounce off the 100 weekly moving average on Bitcoin after a pretty sharp sell. And so I'm still thinking we get a little bit more upside in Bitcoin here, right? Maybe back to 100,000 before that next move down to the 73 to 75,000 level. All right, flipping over to the daily chart here, we can take a look on the daily chart. Basically, again, to me, what are we seeing here? So the first thing that's catching my eye on this Bitcoin daily chart is we've had a reversal, and then look at what's happening. This is starting to put in bullish consolidation. The idea is we might be setting up for a move back to the upside. All right, gold. Gold here, so it's still within its wedge pattern. But look at what it hit today. It hit the high end right here, right in this vicinity here, right there. So again, guys, this is important because this is the make or break upside level, right around 41.75. Okay, so we see the trend line of the wedge descending, the trend line down here of the wedge ascending. It's getting to a point. We've talked about how wedges get squeezed, and then you either get a big move up or a big breakdown to the downside. And so again, notice how we hit the trend line, and so far gold's pulled back. That's technical analysis to a T. It's recognizing that this is resistance. Now, it doesn't mean it can't push through the resistance. It just has to be respected until proven otherwise. So again, folks, we'll see if we break through here. If we break through and confirm, we have a good shot of reaching all-time highs, maybe even into year end. If we don't and we come down, we have to watch to see, do we break this trend line, in which case the trap door opens for a move significantly lower. But suffice it to say, as a technician, I am still waiting to see which direction is the likely outcome, because I need to see which way the wedge pattern breaks. Just that simple, right? All right, so going on here to silver. Silver's much the same. Silver's actually having a decent little move today, but really you have the same sort of, it's a little different looking wedge, but you still have this trend line up here, which is your all-time highs, your upsloping or ascending bottom level. Which way is it going to break on silver? Let's watch and see. All right, if it breaks this trend line, you likely get a bigger dump, probably into the 45 level, then maybe even as low as 40. If we break to the upside, 57 is my next target, then 60 to 62. If we take a look here at crude oil basically flat to slightly negative today. Again, looking at this chart here, we can see we're still within this banded kind of parallel with it, is still a cup and handle pattern. And so I did take a small long, very small. I explained yesterday how you have your risk versus reward here. So my risk on my trade is only about 2.7% because I'm using that low as a pivot low. If it breaks below that, then the pattern fails. And then my upside would be about 10 to 11%. So risk reward to me makes sense with a bullish pattern. Even if the pattern has struggled to break out, at least my risk is very minimal. And again, quantifying your risk on every trade is important because, again, listen, you might have a 90% success rate on a pattern setup, let's say, which is amazing, right? I mean, it's very rare. But let's just say you have a 90% success rate on this setup. And you're like, okay, so I should take it, right? 90% success. I mean, who wouldn't take 90% success? But if you look at your risk reward and you're like, okay, I'm going to make $1, but I'm going to risk $100, is it still worth it to take that setup? I don't think so. And so that's where the risk reward has to be looked at on the trade to see if it makes sense, even with a high probability setup, right? So again, these little nuances, very important for us as traders and investors. And then lastly, we have natural gas here bouncing up, guys. Good bounce on nat gas. Again, we have rolled over a little bit from our highs. Let's see if we have one more move up here to potentially get into resistance. Listen, there's been no trade on nat gas for me for a while. I had wanted to short it in here. I'm still interested. I don't like when charts stall out because it can allow them to digest and consolidate, and then they can gain energy again for a bigger pop to the upside. But I'm still keeping an eye on it, and I'll obviously keep you guys fully posted. Whatever I do, whatever I'm looking at, the trades I'm setting up for the day, I'm here for you guys, right? Pure charts, no BS is our mantra here at Verified Investing. Doesn't matter what my feelings are. No one cares about my feelings or my gut or anything. Just like really, we shouldn't care about it when it comes to investing. Like our emotions are great in other things like relationships, love, etc. But in charting and trading, it honestly gets in the way. And you got to be like a robot as a trader. Analyze the factors, look at the probabilities, look at the risk reward, and make the decision off that. Not what we want to happen, but what is the probability of success here. All right, guys. You guys go have, if you celebrate Thanksgiving, go have a wonderful, wonderful Thanksgiving. I'll be back Friday morning with another game plan. We'll get into that. But again, otherwise, if you're not in the US, you don't celebrate, just have a great day. Anyways, I'll see you guys on Friday. Have a good one. Take care.